Apple's balance sheet has a lot of useful information that would be important for investors to look at. The four I decided to choose were cash and cash equivalents, accounts receivable, and inventories from the assets section, and the accounts payable from the liability section. Cash from 2023 to 2024 had a $22 decrease, which even though there was a deterioration, it is still considered to be stable because it is not a massive decrease. Investors can look at this and be worried because if cash continues to decrease, it could lead them to believe that Apple has a problem with paying off short-term obligations. From 2023 to 2024, there was a major increase in the accounts receivable section of the balance sheet. Accounts receivable is the money that is still owed to the company that hasn't been paid yet, and it's usually by the customers. An increase of $3,902 raises concern for investors, as it shows them that Apple is not effectively and efficiently taking payments from customers. Apple allowing this to happen could lead to them having cash flow issues. There was an increase of 955 items in the inventory section on the balance sheet from 2023 to 2024. An increase in inventory is generally not a good thing, as it shows there may be problems with selling certain items, as well as Apple not making as much money as the previous years. An increase in inventory numbers can lead investors to believe that Apple has poor management with the problem of having too much in inventory. This could be because of overstocking or just not selling enough of a certain product. From 2023 to 2024, there was an increase of $6,349 in the accounts payable section. Unlike the other items on the balance sheet that we looked at, having an increase in accounts payable is generally good for the company. Having a higher amount than the previous years shows that Apple is using their credit better, which is essentially saving them cash, which can improve short-term cash flow.
Hey, I'm Andrew Gonthier, and today I will be going over Apple's investing and financing activities for the 2024 calendar year. For 2024, Apple's statement of cash flows highlights the company's key investing and financing activities. Apple's investing activities included purchasing marketable securities and acquiring property, plant, and equipment. The company's financing activities including paying dividends, repurchasing common stock, and issuing term debt. Now, for investing activities, the first thing we have here is marketable securities. Now, that refers to financial assets that can be easily bought and sold and converted to cash. So essentially, we're talking about liquidity here. Apple holds a substantial amount of marketable securities with a total fair value of approximately $91.24 billion as of June 2024. And this refers to the combined estimated market value of all assets within a company or portfolio. This includes investments in short-term and long-term securities as part of its cash management strategy. Now, the second one we have under here, under investing, is capital expenditures. Now, this refers to funds used by a company to acquire, upgrade, and maintain physical assets such as property, plants, buildings, technology, or equipment. Apple continues to invest in property, plant, and equipment with gross assets valued at $117.13 billion, supporting its ongoing innovation, infrastructure expansion, and supply chain improvements. Now we'll go down here to financing activities. The first one we have here is share purchases. So a share, also known as equity, is a single unit of ownership in a company. When a company issues shares, it is selling pieces of itself to raise capital. Apple purchased 387 million shares of its stock for a total of $70 billion, emphasizing its commitment to returning value to its shareholders. The emphasis on share buybacks shows strong confidence in Apple's financial health. And the second one we have here under financing is debt reduction. A big company can reduce debt by increasing revenue, cutting costs, or negotiating with creditors. Apple reduced its total outstanding term debt from $105.1 billion in September 2023 to $98.3 billion in June 2024. This reflects their efforts to manage its capital structure and interest obligations. So overall, Apple has made significant progress in these categories, and they continue to increase in their net income each year. Now, it is important to understand that net income is the amount of money a business retains after deducting all expenses from its revenue. On the other hand, revenue refers to the total amount of money from the sale of a product or service. So all of these strategies are working well, and I agree with Apple's financial and investing strategies because they are without a doubt one of the most successful and important tech companies in the world. Thank you.
Hello, my name is Manuel Kyle. I'm tasked with part 5 of Finance Project 2. I'm asked to identify 2 items not included in financial statements provided by Apple that investors would consider important when investing in Apple. These reports are important, but they don't tell the full story. There are many key non-financial factors that investors need to consider. I specifically chose brand strength / customer loyalty, as well as supply chain and geopolitical risks. First, Apple's brand strength. Apple has one of the most loyal customer bases in the industry. Their ecosystems like iCloud, MacBook, Apple Watch, all these little gadgets they create all work a part of this ecosystem, and that ecosystem keeps users coming back even with premium prices for all of those products because of how seamless, simple, and easy to use they are. Competitors like Samsung do offer stuff like this and more of an affordable option. However, Apple just seems to always be on top of the game when it comes to repeat customers and revenue, and overall they just continue to be at the pinnacle of a successful company. The other topic I chose is supply chain risks and geopolitical risks. Apple relies heavily on China for manufacturing. So this can be pretty risky because of things like COVID-19, where there was supply chain bottlenecks. This caused Apple to have to delay some of their releases, such as the iPhone 12, because of chip shortages and just parts and pieces taking much longer to ship, and then products being delayed to be shipped to sellers and retailers. Despite these challenges, Apple had a record fiscal year and their stock doubled by the end of the pandemic. So that's something to consider. Their stock did take a little bit of a hit in the beginning. However, they remained stable and rebounded. And again, by the end of the pandemic, their stock had doubled. Final takeaways from this is financial reports are important, but they don't tell the whole story of a company and their success. Apple is successful and a good option for investment because of the strong brand loyalty and just overall brand image globally. And then despite supply chain issues being a possibility, they so far have showed that they can adapt accordingly. They have stated they're going to continue to branch out into countries like India and Vietnam, but this will take time. So I suggest investors to sit back and continue to just overall investigate how Apple continues to perform with their supply chain. Thank you.
To choose which of the 2 companies would be the better investment, we must continue to compare some key items from the company's 2024 financial statements. Apple had a revenue of $391 billion in 2024, an increase of around 2%. Samsung had a revenue of $220 billion in 2024, an increase of around 16% from the previous year's revenue. Samsung's growth rate was significantly higher than Apple's in the year of 2024. Apple has a gross margin of 46%, while Samsung has a gross margin of 38%, indicating that Apple is the more profitable company of the 2. This also indicates that Apple has a stronger position within the market than Samsung does. Because of this, investing in Apple will most likely give you the greatest rate of return. In 2024, Samsung fell short of its projected operating profit in the quarter ending in September and issued an apology to its investors. They expected $7.7 billion in profits and achieved $6.35 billion for the quarter. They cited one-time costs and negative impacts to explain the discrepancy between expected and actual profits. Apple also faced challenges in 2024, with sales dropping for the iPhone, Apple's most profitable product. The company was also forced to pay a fine to the EU. Apple also released a list of risk factors in their annual report for 2024, including geopolitical tensions and issues involving the introduction of AI features within their technology. Comparing the financial performance of Apple to that of Samsung in 2024, I would recommend investing in Apple. Apple maintains high profit margins, is a stable company, and provides strong shareholder returns. While Samsung did have a higher growth rate in terms of revenue, it has a lower profit margin and may be more volatile due to the financial issues it went through in 2024. Apple faced issues as well with the drop in iPhone sales. However, they maintained a strong profit margin. And the issues with introducing AI features is an industry-wide risk factor, meaning it is a risk factor that also may affect Samsung. Overall, investing in Apple is a more stable choice with a higher expected return on investment.
For my analysis, I have compared Apple and Samsung electronics. I went through two different documents that gave both Apple and Samsung's consolidated statements of profit and loss. I started with basing it off the net income for both companies in the year of 2023. Apple's profits of around $96 million and Samsung's profits of around $11 million. This shows how the income for Apple was higher than Samsung's, though the more I looked, I found out that between 2023 and 2024, Apple had a drop in profits starting at around $96 million in 2023 and then dropping to $93 million in 2024. Though when you look at the profit for Samsung, it went from around $11 million to $25, which is here for the US dollars and there for Apple's US dollars. Even though it is not as high as Apple's net income, it is still a growth compared to a decline, though Apple shows a more significant growth even with a slight decline in 2024. Next, I compared the operating profit for Apple, which showed around $114 million for the year of 2023 and around $123 million in 2024. And then moving to Samsung's, they made around $4 million in the year of 2023 and $24 million in the year of 2024. And I used the operating profits, those two, operating income. From the operating costs alone, this should introduce how much profit these two companies receive, showing the company's profitability and efficiency. So in conclusion, I think Apple shows stronger operating profits. Apple's stock also offers a safer investment compared to Samsung due to Apple's greater market value.